Yeah.
If you have time, I'd like to take a few minutes. So what is happening is that like I've been working in this industry for long, and now things are tougher. So I'm looking into different paths. I've not decided what to do next, but this is something like I'm still keen to do something in Indian market. But at this age, it's difficult and it's easier to build something. So in my expertise, I've been macro analyst always, macro and quant strategist. So I've been an analyst for Indian markets, basically FX rates for different EMs, Indian market especially. I've personally been an investor, been quite interested in technical analysis for 17, 18 years now, almost 20 years. So, so that's I think is my strength, as well as like I try to plug a lot of technical charts along with macro story, and then try to give it a pitch so that we can invest, and that technicals have this quality that you can put it on 5 minutes chart, and you can put it on monthly charts. Like a lot of people don't believe in it, but yeah, I personally invest just because of technicals, and it gives you sometimes an edge. And definitely the news around like whatever Trump is doing or whatever we see in the markets, there'll be a lot of shocks always. Like the technicals levels are broken and so on. But yeah, still we get a fair idea what is going to happen. And I can show you some of the things here, maybe, and you can give me some ideas what is like. All of you are from maybe US markets, so it's a bit different, but yeah, and I'm primarily like come from top down approach. So I look at first like what is happening in S&P, dollar, US 10 year, and then come to Indian market, and then so on. I still need to build a lot of things, and I'm planning to build some of the models on long short, which is called a factor investing. I think Ma would be familiar with it, and maybe some of you guys as well, which is a neutral positioning. So I'll start with that, and maybe you guys can give feedback. And you guys are busy, that's okay. How do I share the screen?
Uh,
Okay.
नीचे में just yeah.
Yeah. So, can you see it now?
Yeah.
Okay. So basically, like how it works is basically like you guys might have heard about elite ways. So so that is one of the. So what I use is elite ways. What I use is macro fundamental, and what I use is like the resistance and support levels. First of all, let's start with dollar. So this is a dollar chart on weekly basis, and I can extend it to monthly. So this is a dollar chart, which is a monthly chart going as far as like 1973, but we are more interested in the recent ones. And what has happened recently is that it in 2011, 2017 and on, it came from 89 to 100, then came back to 89, and again went to 113. So $10 changes, and again the range has been narrowing. So it went up to 110, and then 96 it has taken a support, while the expectation was that it will go back. So there's a decent range which has been forming in the last 10 months. And what you see here is that the dollar has been strengthening here, and it's at a very good level, like a very important level, which has it's been touching again and again, like within this range. So what I think is that this is a key level, uh, and why I cannot compare this level prior to uh, in around these levels in 2005 to 2009, because one of the macro factor is that US is no more very dependent on oil and other energy sources from the world. So it doesn't really care about what is happening to oil in terms of supply, at least, while it cares about the prices. So I'll go to the 10-year US 10-year chart. So US 10-year, it's a it's a very interesting chart what you see here. So US 10-year has been like coming consistently over the years, like 30, 40 years. It is coming from 80, it was 13 to it has come down to like it, the minimum it went to 0.5% on a like a rounded basis, and what you see, it has come up from this level to 5% and then still coming in a range. While this levels, this trend was a very good level, and the funding was very low, the mortgage levels were low, and because the dollar, US has the ability to print dollars, it could print dollars and keep the funding low at home. And now what is happening is that if we just go by the technical chart here, this is a very important pattern here, which is called a flat pattern. And while it breaks, it can break to like it will have a target of 7%. So that's how it works. But I would say that Trump will be really, really careful not to break this level. And the level on the chart is 4.6%. So I think that is something which we should be like keeping a watch, like and because this is a level which is very, very important, and traders might be switching their positions on. They are already on short treasury side, but they will lose further faith on US treasury and they might sell it. So what will happen is that I think Trump will do a tackle during this period. And we already have this news floating that they are very much concerned about treasury. They already have a 37 or 38 billion of debt, and out of that 9 billion is going to roll over this year and 6 billion is going to roll over this next year. And within that, we have seen recent two auctions which have been really very, very poor. So I think Trump is watching the markets, and if the oil prices go up, the impact will be in terms of inflation and US 10 years and everything. So this is a very, very important level, and that's how technicals can help you, that like you have to tie out the whole story, what is happening in the market. And this is, I think the risk reward levels here is low, that we can go into the long position on US Treasury, as well as it gives you a story that probably like the worst is over in terms of higher yield, but we have to watch out. We are probably towards a tipping point here. And if I just talk about S&P 500, S&P, if you remember, like it has gone from 666, I think that was the level in 2009 bottom, and it has gone in 5 waves. And somehow I feel that these 5 waves upside is kind of complete. And I say it's complete, like the rally from 2016, which has been a rally from 1800 to 7,000 odd. Now, if this level breaks like 6,232, because it's a rising trend line, and currently it's at 6,300, and we probably wait for 6,200 by probably month end. And there's always a risk of like the failed level, if that is failed or so, which has happened in the month of April 2025. So then also it broke the level, but again Trump did the reversal and things were pretty rosy. So I believe the same thing happened now, and we have this trend line around 6200, where uh, where it can probably move in this range for some time, and we have a low risk around this point. So again, this shows that while we don't even consider markets, like what is happening on Twitter, what is happening in terms of statements, I think it's very, very evident when we try to uh, talk to all the charts that probably there's some kind of proof which can or some agreement which might come, because Trump will be worried about the markets below this level on S&P, below this level on probably like US 10-year. I would like to show some of the charts, like maybe Meta is one of the chart which I have been watching for some time.
Yeah.
And you,
Katie is missing, right? He should have been.
Thinking.
yeah, a lot of people are missing. I thought like people will come, but maybe Sunday. So, this is something which has broken, and I'll tell you, like this has broken quite decisively, and we can see that Meta, while this was probably one of the stock which corrected quite a lot from 380 to 94 during the last sell-off, and
Yeah.
it actually broke down below the 2020 level. So this is one of the vulnerable stocks, and I think the next level to watch for is, like, this is at 38%. This might come back again a bit, but I would eventually expect it to be 370 levels, maybe in 1 or 2 years, just because I think its run is over for Meta. And similarly, Microsoft is something which is also very, very, like, it's one of the chart which is close, similar to S&P, but
Yeah.
again 5 wave, and we see that this has again broken, and this has come to the level of peak in 2021. So again, if it breaks below this level, I think Microsoft is something which is very weak, similar to Meta, and this is again 344 is a key level to watch, and if it
Yeah.
stays below 344, I think we can probably, like, if you want to switch into better options that time, it will be a good idea, because Microsoft is something which is not going to give very good returns going forward, because it has broken trend lines, it is like completed its total upside and so on. While in terms of Nvidia, again, nothing has broken yet, but again, it seems like stop has been made. So we have to watch out through the key levels like 150 and so on. So
I think
Apple,
we should,
I can't. Yeah.
I was going to say, I think we should extract out the last 6 minutes, especially the US equities, and post that separately. Because I think most people don't, like, I'll tell you, I think Vineet and I, we do pay a lot of attention to technicals, right? I definitely do. I know Vineet does as well. But
Yeah,
most
just
people,
trade on that. I trade on that. I don't look at that, right? So 50, 100, 200, that's my.
so you are preaching to the choir, right? हम लोग we completely we believe, right? So it's not an issue. But I do think, especially the meta thing, right? It is super important, because
Yes.
people have this firm belief, nothing can happen, nothing can go wrong with meta. ये जरूर highlight करना होगा.
Yeah.
Right.
I don't do this level of like sophistication, and there's no sophistication in my analysis, but yeah, this is eye opener. I'll just look at the indices.
Yeah.
But Meta, like they're the only social media, right? So
Yeah.
See, for me personally, I
Yeah.
don't do trading on individual stocks. My philosophy for last 8 years has been like I have this Wealthfront account.
Mm-hmm.
I have linked it with my bank account. It takes money out of my bank account every Monday, invest it as per whatever my risk portfolio or risk profile is on their site.
Right.
They do all those like tax loss harvesting and index fund and everything. And that has given me like good results. But like last 8 years was everything was up and up. So I was always interested in like knowing how to do this thing
Mm.
and how to turn this thing into a signal.
Right.
Basically how to automate everything.
Oh, right,
I
right,
think it
right.
was like interesting to learn about this thing in detail and how to go about it.
Right.
If you automate, you lose the fun of doing it yourself. Right?
Mhm.
See, the problem is like I'm super lazy. Like I have done a lot of investing. Like sometimes, like Anshuman used to say, "Okay, buy this, I'll buy it,"
Yeah.
but I'll forget to sell it.
Mhm.
So that's like automation is my main problem. Or like at least like one click, like build a Discord
Oh,
bot
see.
or whatever. Like click on it and just it will just gonna go and sell it. Don't ask me over and over.
So there's a very good indicator which is called super trend. Like, because see, when I say very good indicator, because it gives you when to buy and it gives you the stop loss also. So that is important because and you can probably apply it here.
Sure. Interesting.
That is so it- it's best to put it on daily because the decisions you will be taking it on daily basis. Like what is it? So if you are looking at your portfolio every 5 minutes, you should put probably 5 minute indicator and so on. And you can see it's basically it asked you to short meta at 650, and again the stop loss is at 592. So it gives you like the levels, like it's at 525 and 592 is your stop, and you might have opened it at 640 and it's at 590. So 50 is locked, 50 points are locked for you at least. If it drops further, the stop loss will be tightened. So there are multiple ways to put stop loss, and everybody struggles with the stop losses. Like it's not that I don't struggle or so on. Everybody like they it's going into a position is easy, but exiting out of a position just because of greed or just because of like not taking the losses, it's very difficult, and everybody like. So you should either have a mental stop loss, like I won't lose more than maybe 5K dollars on this position or so on. That is very, very important that we have that stop loss. And everybody struggles with that. Like you would have heard about JC Livermore's story, like he was the richest person in the world and then he was shorting the stocks like anything, and later he went penniless just because his money was over. He was just piling on the position and all. He lost all the money and he did his suicide just because he lost all the money. So everybody, like even big or short, like a small trader, likely struggles with stop losses. So yeah, it's okay. That's,
I was like working with Rathi.
hmm.
Like I don't know, like it hasn't like 7, 8 years since I worked with him. So he was involved with this guy called Kryptonite. I don't know if you guys heard of him. So he used to run a crypto Discord channel,
Okay.
and he would like charge everybody something like $100 a month.
Hmm.
And he's based out of India.
Okay.
Just like do $100 a month. It'll like give signals to like what cryptos to buy.
Okay.
So I like did some Discord bots for him on his AWS. So
Okay.
that's when I got involved with crypto. So I was like trying to like build something out of that to like kind of like automate crypto trading, because crypto is very volatile, right?
Right.
Theoretically, it's possible to make money every day there,
Right.
but you have
Right.
to like very quick because the trend changes in 15 minutes.
Right.
As long as you can like track a whale and just ride along with it. So I was trying to build that, but of course, like lost my focus, never did it. So probably that's something I'm gonna start again.
Huh.
So basically, crypto is something which I created one chart, and that is very, very important, interesting as well. So this is Bitcoin. In every when I built it, I think there were not many putting it there, but because of my employment, I don't do it on Twitter a lot. So what is happening is that every 4 year it drops by 70 to 80 years, 70 to 80%. It's 14, 18, 22, and this year is 26. And you can see this is a very important configuration, which is called a wedge, WEDGE, and this has broken below it. So it is very, very probable that it will come again to a level of 25 to 30 during this year, and that is my target. And you can see it's very, very like coherent. Like first time it went down by 87% in 396 days, and again 84 and 365, 76 and 365. So I'm expecting something like 80% drop in 400 days, 360 to 390 days. It's very difficult to precisely predict it, but yeah, that's what I am expecting. And this is my top bet, like among whatever you say, this is my top bet just based on technical. And I picked it up here like in November or maybe December when the trend was broken. So that's how it can help you. Similarly on gold, I'll tell you. I'll remove this for now. So gold also, you can see there's a very good trend line which is not being broken yet, and the level to see is 4,000.
Okay.
And I think it's a very, very like when you again like put a story to it. So gold has a like I'm bullish from bullish on gold from a level of 1,600. Like so, and it was obviously not very pretty until 2023 mid, and then again it broken on the upside. So what is happening is that you can see this trend line is taking a support around this level, and I think whatever closer level you get from here, it's a very good buy on the gold. I'll tell you the macro reason, because today or tomorrow Trump will go for printing money. There's no way out that they can fund their deficit. They can actually fund their deficit at these high level of interest rate. So they have to buy bonds at these levels, and they have to reduce the bond yields, and that's where the things get interesting, because the gold will be the one thing which will be benefited on positive side. And equity, I'm not still saying it will break down below 6,200 and then go into like something which is a bear market for US equity, just because Trump wants to win the election in November 2026. It may not be possible for him to win the election at this point, but that's what he'll try. And the gold will be the biggest beneficiary. Silver, again, similar trend is there, but the entry point is quite far below. So there is a lot of risk in silver, but gold has a much lower risk. And I would say like probably the gold is something which is a better buy. I would have suggested some of the things in Indian equities. Like in Indian equities, if you guys are interested, I think pharma is something which is a very good chart. Like it is called a head and shoulder pattern, and the target from here, like it is trading at 22,000, and our target is something like 30,000 in 1 or 2 years. So these kind of things, like I do it for my mutual funds. I like pick up the sector funds. That's why I avoided like the IT index and so on. and basically I never invest in the broader index. I just pick up some indices. I churn them every 2 years or so on, so I can pick up something better. So that's how. If you guys have anything, any suggestions? So my plan is like, if nothing works out, like I'm still looking for some opportunities, maybe in Indian market or so on. If nothing works out, I'm planning to do maybe some kind of like money management, maybe through mutual funds or maybe through stocks. The rules are very difficult in India. Like you have to get so many licenses just to be advisor and so on, which is a path forward.
This makes sense to me. You only look at 1 month, like monthly charts, or do you look at weeklies?
No, I look at 5 minutes as well, and that's what I'm planning to do for my trading.
Okay.
What I do is like I've done a bit of trading during like when I was at Adani Treasury. I was doing trading because that was allowed. I'm still interested. So you can see like in intraday also, this is something which was the pattern on like Nifty on 27th. And if you see intraday here, like it has broken down from this level, and then you can see that it is there. And to be honest with you, I actually created one strategy for Deutsche Bank in 2011, 13, that is 2009, 11. 9 to 11, and when this was a forex strategy called turtle trading, where so the market opens in a range and then it breaks out of this range. Like you can buy it on the upside and you can sell it on the downside, and you wait for the day end to happen. And that's how like I tried implementing that fully automated. We made a very good money, like 3 million in 2010. On a notional of 2000, like 60 million. But yeah, again, my boss was let go, so we couldn't continue there. Yeah, you had a question, Anishman?
So this, you were doing it on G10FX or?
Yeah, I was doing it on G10FX. I actually tried all the pairs, but that time the currency spread was too high. Like it used to take 1 bip for Euro USD and 2 bip for GBP USD. So now the spreads have shrunk to like 0.1, 0.2. So it is much easier. And we automated it fully. Like we just like you have that range. You just need to put how much money you want to put on the day, and then it'll have a buy signal, it'll have a sell signal, it'll have stop losses, everything will be there.
Question for you on this. So how are you defining opening range? Like was it based on
15 minutes.
the time zone of the base currency?
Yeah, so we tried multiple things. So one of the things is that the market should be very liquid around that period. And at that time, London was the main FX hub. Still it is, because it connects all the time zones. So we tried multiple things like 7 a.m. London, 8 a.m. London, 7:30 London, and so on. While my desk was New York that time, but we tried multiple things, and there were so many combinations, like what range do you take? And then the range will be broken, then you put a buffer around that. Like you cannot immediately buy sometimes. Like you have to see that it is above that for maybe 5 minutes, maybe 10 minutes, maybe 15 minutes. That thing we tried. And then again, we tried like it remains above that range for 5 minutes, 10 minutes, 15 minutes. So there are a lot of combinations we tried. And back in those days, like I did everything by like hand. Like it was not, I did not optimize it. So there were a lot of combinations. I ran those combinations and it was a huge data. Like we had, I started with the tick by tick data earlier, but then I switched to minute by minute data because it was quite cumbersome. It's still 72,000 quotes a day. and still the minute by minute is like how much 1400. So it was much easier 1400 compared to when it was every tick, which was 1 lakh around.
Mhm.
So we could manage to run it in 10 minutes. It was taking 2 hours to run the back test earlier. So it was something which I did, and mostly I am into, like, now if nothing works out, like I'll do my prop trading when I run a lot of so that is my idea. Like I trade options and like how to buy options. I'm generally a seller, but sometimes I buy options as well, which is just intraday because I cannot take overnight risk.
Okay.
So that is the idea.
Cool. This has got me thinking.
Yeah, I think because I've been into this space, but like something which I'm keenly interested is in FX and rates, but Indian market is very closed for FX and rates.
Yeah.
Because there are limited seats, as well as RBI doesn't open it to anybody, like for retail and all. So
Mhm.
for retail, it's basically just the equity market where they can take a punt, and the government is taking a lot of tax and everything. So it's making it difficult, but still there will be opportunities for sure.
Cool.
Sethi, anything from you?
Not really. Like, I do not invest in Indian markets just because of the rupee depreciation. I lost so much money over the times. Like,
Yeah, I think that is a story which is there always, because people invest in India just because of their love for the country, and later, like every now and then, these kind of situations happen when the currency depreciates beyond the imagination, and people lose a lot of money investing in India. And then, like, these are slow decisions. So once they get hit a lot, I think it's difficult to invest again.
but there's no way to like keep like investing in dollars, right?
I think there are some funds which hedge dollars, like you might have to find out, because I don't see it from that angle. But see, the idea is, even if you have that particular hedge, it is still going to cost you 2.5% a year, because that is the hedging cost of Indian rupee.
Okay.
So they'll anyway deduct 2.5% just for currency hedging. So what is the point? Like, you don't have that 1 year of particular hit, which has happened in the last 1 year, 84 to 95 right now. But again, like you don't see that portfolio going down by a lot, which couples with equity performance, like, or underperformance. But again, you have that 2.5% of depreciation.
No, I was like pitched this product by my relationship manager at ICIC. They said, like, put your money into the NRE account and it will stay in dollars and you'll earn interest in dollars. So it's like, that's too good to be true. It's like, it cannot happen that way. Well, everybody would be doing it.
No. So that is a product which you can use. Basically, and RBI is probably going to open one FCNR window. So
Right.
FCNR is foreign currency non-resident. So what happened in 2013? So the currency was depreciating a lot. 2013, like there was this Fragile Five, that term you would have heard. Brazil, India, Indonesia, and 2 more countries, like probably South Africa, and probably Turkey was there. So 5 countries. Indian currency was depreciating from 53, and it finally came down to 68. So there was a huge depreciation of 30% in 3-4 months. It's nothing compared to what is today. What is happening is nothing compared to what was happening then. And finally, they came with one of the measure which is stopping the rupees fall, because the foreign banks take a lot of positions outside India, which is not reported back to RBI. RBI has tightened the noose, and now they have to report that position, at least on total basis. The second is there's a news that they have to cut their position in next 10 days. So that is going to help me a lot in next 3-4 days itself. You can see 2-3% of appreciation. The second thing is they open this FCNR. So FCNR is like something you deposit the money 3%. Like you can even take a loan in US and then you deposit that money into their account. The bank will do FCNR from with RBI. They get probably 3.75%. You get 3.5%. So that's a very good deal compared to what you get in US. So that's going to happen soon, I believe, because RBI is worried that with the currency depreciation, and they have lost a lot of reserves recently. They have lost probably from a peak of 750 to, if I don't count their net forward position, it has come down to 600, because they have put a lot of money in forward position which is not visible. So they cannot go with this phase, otherwise they will run out of money. So that is a very good product.
It was like a FD. You make
Yeah,
a
it is kind of FD. It's a dollar
account
FD.
and it stays in dollars. I was like, and they were willing to give me like 6% at that time for a year. So like that's no brainer, right? But I thought there should be catch somewhere.
No, there is no catch at all. Like I think you can talk to multiple people, but because that product I have not seen as such, but there's no catch at all. It's a plain simple product, unless ICICI Bank doesn't blow out. Your money is safe, and I don't think ICICI is one of the systematic bank in India, so it won't blow out like so your money will be pretty much safe.
That's interesting.
And I think that scheme will come in, and your relationship manager will anyway contact you in next couple of weeks, unless rupee starts appreciating a lot. They have already done this measure, so we can see the effect from Monday itself. Let's see what happens, and if RBI can come up with the next things. But still, I believe that US good performance time may be over, at least in time terms. The kind of returns they have seen, it won't be possible in future. So there'll be some more opportunities which will come, or there may be a total restriction of wealth in the world, which is again possible. Remember that Nasdaq was at 1200 in 2008, and now it is 24,000. So it's like 20x in 20 years. So some bit it will have to give away, and it is not a big deal, to be honest. So yeah. So that's how I tie out both the macro and technical story. That's what I have been doing for last 17, 18 years. Happy to have your views, Anshuman, Manoj, or maybe someone else. I'll be more active in the group. I was struggling with a lot of things, so now senses. Hopefully things will be better from here.
I think we should do like a once a month chat session just like this.
I was thinking the same thing. I was like, this should be good, right?
Even without an agenda, just like go and talk.
Yeah.
Right. Yeah. We can schedule one every month, and we can schedule one.
Yeah, that'll be really good. Let's do it. Let's.
Maybe we should find a better time, because probably just 10 people were around, not even the regular chatters on the group. So maybe.
I honestly thought this was a good time, because it's sort of okay for everybody, right? Okay for Central Time, okay for Eastern Time, okay for Pacific, okay for India, okay for UAE. London, everything in between. Maybe not okay for Singapore, but I don't know. It's
Singapore only has like finance professionals, and they know it already. So if you want some like Anshuman, I can get you connected with some of the macro traders if you want.
sure thing. I would love that actually.
Sure. Okay.
Yeah.
Okay. Perfect.
Awesome.
Thank you. Thank you for your time, and let's try to schedule once a month.
Super useful.
Anshuman
Sure.
for scheduling and Anuj for staying there.
It's better to do this rather than watch IPL, frankly.
Oh, yeah.
IPL is, I mean, I was tracking score. It's like going great.
Oh,
Oh, Rohit just. Okay, he went down, but they're scoring at a. They'll make 220 in no time, basically.
hardcore. मैं देखा भी नहीं, मुझे पता भी नहीं था.
Maybe
I
not.
saw the World Cup obviously, but chalo.
Chalo.
Thank you
Okay,
guys.
bye-bye, guys.
Otherwise, we'll catch up later.
Bye.
Okay, bye.